Hello and welcome to this special NDTV presentation. Now we all must remember that the first union budget is going to be presented. Why I call it the first in the times of a pandemic. And the effort, it seems, of governments as well as industry experts is to see an India that is future ready. So how exactly are we going to build India's economy for the future? What should go into it? Is Atmanirbhar alone enough? Or what else should the government be doing as we are attempting to rebuild our economy after a disastrous lockdown? When I say disastrous, I mean disastrous in terms of the economy. It was important for saving lives, but what about livelihood? Let me now introduce our panels. We've got Mr. Abhimanyu Munjal. He's the Deputy Chair of CII Northern Region, Co-Chair of the CII National Forum on NBFCs, and also HFCs, and Joint MD and CEO of Hero FinCorp. Thank you very much for joining us, Mr. Munjal. We also have Mr. Sanjeev Bajaj, Vice President of CII and Chairman and MD of Bajaj Finserv Limited. In just a short moment, we'll also be joined in by Mr. Rajneesh Kumar, Chairman of the CII National Committee on Banking and past Chairman, State Bank of India. All right, so the CII has made a lot of recommendations on making India future ready. So we'll begin with you, Mr. Munjal. What really needs to go into? First of all, if you would like to tell us, what has been the suggestion of CII to the government to make India future ready?
So, thanks, Ankit, for this. Not only is this the first union budget, like you mentioned, after the lockdown, but it's the first union budget of this new century, right? So I think it's going to be historic. The few very important points from an NBFC perspective that CII has put forth, one which is regards to taxation. As NBFCs, we are charged TDS on interest payments, which are applicable under Section 194A of income tax, which is not applicable to banks. And such exemptions should be there for NBFCs as well, since the systemically important NBFCs are really governed equivalent to the banks today. And this will give a lot of cash flow to NBFCs to onward lend and to take care of their liquidity position. And I think on the taxation part, we have another suggestion, which is the taxation on provisions. So when NBFCs provide for bad debts, we are actually taxed on that provision, and we have put out a request to ensure that to get this exempt for NBFCs. I think as an NBFC committee, we are actually very grateful of the stuff that has come out during this lockdown from the government. We'll come back for some more suggestions when you ask me again.
Sure. Mr. Kumar is now also with us. Thank you very much, Mr. Kumar, for joining us on this extremely important discussion. But Sanjeev Bajaj, let me come to you now. I think one of the suggestions that was made by the CII also includes creating a single specialized agency to investigate financial sector frauds. Would you like to tell us the thought behind this suggestion?
Sankit, that suggestion basically drives forward the whole thought process that in any growing economy, there are businesses that will not do well, that need restructuring, and that have to go through a process where they can remedy themselves and come back and start working again. With multiple different agencies, we have the courts, we have the NCLT, it creates greater complexity. And while the intention of the government over the last few years has been clear with the whole bankruptcy code, we are seeing too many cases take too long. And that's why if it comes under one agency, this will hopefully make things move faster. They will be firmer. And as a result, there will be greater confidence in the process. Coming also to your larger question on the economy and what needs to be done for this. Let's keep in mind that even prior to COVID, the economy was slowing down. And what COVID has really done is created a significant slowdown, particularly when you look at MSMEs, the smaller businesses, certain particular sectors, hospitality, travel, leisure, entertainment, and these need remedial measures. Not only that, it is the time for us to rebuild India for the future, because the world is looking for an alternative to China on the manufacturing side. And that's a huge opportunity.
Sure.
The government has already started taking action with the PLI and other incentives. And the financial sector needs to support this in ways in which we can talk about going forward.
Absolutely.
Over the next few years.
Absolutely. What steps does the government need to take beyond the Atmanirbhar package or the Atmanirbhar initiative to make sure that we can become stronger in the manufacturing sector? But Mr. Rajneesh Kumar, you're the past chairman of State Bank of India, also the chairman CII National Committee on Banking. Now, banks have suffered the most because of financial frauds, right? Mr. Kumar, one of the suggestions also of the CII to the Ministry of Finance is to create market intelligence units within the ministry to tackle cases of financial fraud. Would you like to elaborate how this is going to help?
So one we have to realize that when we talk about the frauds, many frauds they have been classified as fraud because there have been diversion of funds. And the definition of a fraud, RBI introduced this definition sometimes in 2013. And then there are operational frauds which happen in the banking system. CII is more concerned about the corporate frauds. And many times it has been seen that the market knows much more than the agencies and the regulator. So if there is a market intelligence unit which can, through analysis of the certain data points, for example, using the technology, if they can sound the alert well in advance, then many of the wrongdoings can be prevented.
Okay, Mr. Munjal, in the suggestions, among the suggestions, it also says stronger role for Financial Sector Development Council or the FSDC. How is that going to help, I may ask? And also creating government-owned DFIS to finance key sectors of the economy. Would you like to elaborate on these two suggestions?
Yeah, so, Sanket, I would like to elaborate on the infrastructure funding which is required in the country. So, we believe that it's very important that the government comes out with the infrastructure finance company which can actually fund all the infrastructure projects and spend that is required to actually propel growth in the economy. And with COVID has actually impacted a lot of capitalization in banks. So there is a requirement of new capital which will be required in banks, NBFCs and other financial institutions. Hence, a new banking licenses is something which I know the guidelines are out, which are very welcome. So new banking licenses to actually increase inclusion of financial services and increase inclusion of lending to the last mile is extremely important.
Okay. Okay, Mr. Rajneesh Kumar, quickly coming back to you, the suggestions also say that there should be a tone down of government stake in public sector banks to below 50% through the market route. At a time when we have seen that many private banks and cooperative banks often draw ire and the wrath and have in fact been subject to most of these financial frauds. Many people do tend to learn and respect, government banks. There is a tendency among people to fall on government banks. Once the public spending of the government will reduce in these public sector banks, do you think that it is going to be good for the public trust? I mean, I just wanted to know the thought behind this suggestion.
Definitely. No, one is definitely the depositors. They have faith in public sector banks because of the government ownership. And that is the reality. And about the governance also, there is no proof that private sector banks are necessarily better than the public sector banks. Some of them are definitely better, very well governed. They have delivered value for all the stakeholders. Within the public sector also, there are some very well managed banks, and within the public sector undertakings also, there are quite a few shining examples where public sector undertakings are doing extremely well as far as delivering value to all the stakeholders is concerned. It is felt that if the government ownership is below 50%, then the banks can have more operational freedom. Right now, the public sector banks, there is a certain rigidity as far as their operations are concerned.
Would you like to elaborate,
so
sir?
The debate should be that if, say for example, rigidity in terms of, say, the compensation structure, the operational freedom, the nomination on the board, the policy in regard to hiring of the topmost talent. Topmost talent doesn't come free, it comes at a price, but that is not possible within the current framework.
Sure.
So there are many issues around the governance and operational freedom for these banks, their business strategy, and even with ownership of 51% and above, I believe that operational freedom is still possible, but decision making at times gets hampered. That is the reality, because there are certain then the legal requirements.
Sure.
And this has often been discussed, that what are those issues which makes the decision making slower, plus the stability at the top and finding the competent people to run these banks. There is an issue around that, and that has been discussed very often. So the whole issue is about that, more than what percentage government owns. The issue is whether the governance in these banks can be improved and there can be more operational freedom.
Okay. Now, since you raised this point on operation,
board managed.
The one thing that I wanted to ask you, Mr. Bajaj, see, when this Atmanirbhar package was announced, and a lot was spoken about the government going the loan route, where they want people, MSMEs, and industry to take loans from banks, we saw this great hesitation from the banking sector. They had the funds, but you speak to businesses and they would tell you that, see, banks are not ready to part ways with their money, because they don't feel the confidence, the requisite confidence in these business entities. Do you feel that this is going to be a big challenge or an area of concern, though the government has taken significant steps?
The government very clearly has taken significant steps, Sanket, 6 months ago, and the additional liquidity plus the backstop on losses that it offered, especially for MSMEs, has played a very important role in giving them that additional credit. As you know, the 3 lakh crore scheme that the government put in place, about I think 2 lakh crore got used up. So, and it may even be more, my numbers are a little dated. So that has helped. However, keep in mind that the larger issue is 70% of banking in India is public sector banks. Rajneesh was just talking about it. And public sector banks are saddled with huge amounts of NPAs. There's a recent RBI paper last month that talks about the fact that battling these NPAs is making it difficult for them to do onward lending, because everybody just absorbed in this. And hence, that's where focusing on a few large public sector banks, the government should capitalize that and make sure that they can lend. The creation of bad banks, so that you take away the NPA once and for all, put it into a bad bank structure, sell that down, so that these people are free to do new lending, and then you place the right governance mechanisms in place so that you don't create a bad bank situation again 10 years down the line. This is how you have to free up that 70% of banking. The remaining 30%, the private sector banks have already started lending in the last 4 or 5 months, and you're seeing credit improve incrementally because of that.
Mr. Bajaj and also Mr. Munjal, and maybe later Mr. Kumar also, would you like to explain in great detail what a bad bank will do? You know, of course, for the financial sector, this will make all sense, but for a lay viewer right now, these two words don't seem to gel together. Bad bank. What does it mean, Mr. Bajaj?
So simplistically what it means is that as a bank, when you're sitting on a significant amount of your loans which are classified as bad, the nature of the management team is focused towards correcting that. Also, there are RBI norms as to how much capital you need if you're going to lend further. And if a large part of that capital is set aside as provisions, as possible bad debts because of these loans, then those banks cannot lend more unless they raise more money. Private sector banks, hence, in the last 8 or 9 months, most of them went and raised money. But the public sector banks have not been able to raise significant amounts. There's some amount that's come selectively from the government, but not enough. Now, if you take away these bad loans from these public sector banks, put it into technically what's called as a bad bank, it could be into a asset management structure of some type, and sell that down, at least once and for all, you're taking the bad cholesterol outside of the body for the body to function again and to go and lend. You also have to make sure not to create new bad cholesterol, but that's for later. That's another question.
That's a huge risk, because when you start offering loans, isn't the fear that, and that is why initially the banks were a little hesitant in parting with the money, that you would end up creating this bad cholesterol all over again. But Mr. Kumar, I want to come to you now to this point on cooperative bank structure, which you have proposed needs a relook. Now, we have seen that there are many cooperative banks that are in the center of financial fraud. Many of them, you've got innocent account holders who are stuck. So what sort of structural change is the CII proposing in cooperative banks?
No, for the cooperative banks, one thing which has happened now, that for the regulation, it is now the Reserve Bank of India who have been made responsible for regulating these banks. So the supervision part is moved to Reserve Bank of India, and that is a very welcome step. And as far as again we are coming around to the same issue, that cooperative structure, there is a separate set of regulations. It is most of the cooperative banks or societies, they come within the domain of the state governments. And we have seen in the past that the governance structure in these banks is it has been found to be very wanting. And again, more than the structure, it is about certain restrictions on the business model which would be required. The cooperative banks and going into the corporate lending, this is something which is a recipe for disaster. They don't have that kind of expertise, and that is what we have seen repeatedly. So ultimately, it is the quality of the supervision, and RBI being the sole authority, and there should not be any regulatory arbitrage between a cooperative bank or, for that matter, an NBFC or a commercial bank.
Okay. The next 5 to 7 minutes, I want to concentrate on the larger issues of the economy. How do you get the wheels moving? So, Mr. Munjal, one of the things that has been said by a number of economists is that you may want to give loans, right? But till such time that there will not be a fiscal injection into the system, where people will not have money directly in their hands, that demand is not going to increase. So you may keep supplying, but there will be no demand. Do you agree with that assessment?
Yeah, so Sanket, I completely agree. But I think through these interventions that the government and the RBI has done, there has been a lot of injection of capital to the hands of the end consumer. And through this Diwali season, we have seen a spike in consumer demand. But I would like to say that there is a lot of liquidity available in the globe, right? We have to, as India, see what are the ways to attract that liquidity, right? And Sanjeev touched upon China being, manufacturing hub, moving from China to India. So I think, investments in infrastructure and public spending is really important to actually enhance the consumer demand and attract the liquidity which is available in the globe.
Sure. Okay.
And with regards to the bad bank, I would just like to mention what Sanjeev said. Yeah. It's like a TARP, which happened in 2008, where the US Fed really came out there and created a troubled asset relief fund to take all the troubled assets from the country. Not that we're saying that all the bad cholesterol goes out, but it's very important for further growth and for our $5 trillion economy that we really clean up the system, and the bad assets are parked somewhere, and that's a different discussion to be had, what we do with those bad assets.
Sure. Okay.
And also, yeah.
Yeah, please go ahead. Mr. Munjal.
Yeah, and also I think not only bad bank, the other really important point here is the ability to do recourse. Today we have the debt recovery tribunal, which NBFCs don't have access to, and for NBFCs, to recover their debt, it's only probably a civil suit or arbitration, which is very time consuming, and also actually it stretches the judicial bandwidth. So it's very important that debt recovery tribunal, NBFCs get access to them, and as well as SARFAESI, where NBFCs have access to recover their asset only over 1 crore. So only over 50 lakhs. So for retail assets, it's very important that SARFAESI comes to NBFCs, so that there is more liquidity in the system, which can then be given in the market.
Okay, Mr. Bajaj, your views on providing fiscal stimulus?
Very clearly, beyond what we've seen this year, this is going to be a 3-year game. As we know, the government has had to expand its fiscal deficit because that was the need of the hour. We hope that the government comes back to its fiscal discipline, but over a 3-year period. You can't do that suddenly overnight, which means that while the direction will be in the right going downwards, but we have to still handhold this economy going forward. We still believe that there are certain sectors that need to be supported. SME needs to be supported. Certain large sectors I was talking about earlier, hospitality, travel, leisure, these need to be supported. On the other hand, many other sectors are coming back. So at this stage, what I would also say is that the government really needs to think about, for Atmanirbhar India, like the PLI scheme, how do we execute that scheme? It's a great plan. Get the details out, execute it well, create 10 champions in the next 12, 18 months. If Tesla can create a battery plant from scratch to go in 6 months in China, let's show that India can do that in the next 12 months as well. Focus significantly on healthcare and infrastructure by the government. These are both big needs, medium to long term, are job multipliers for the economy as well. So those are 2 other big segments that the government should focus on.
Sure. Okay. Thank you very much, gentlemen. Let's hope that these suggestions are incorporated in the budget, because the CII also feels that the current state of the banking sector acting as a constraint to India's aspiration of becoming a $5 trillion economy. So will there be a structural change in the financial sector? Will it be such a big reform step, very close to the Atmanirbhar reforms that were announced? It'll be interesting to see. Thank you very much, Mr. Bajaj, Mr. Munjal, as well as Mr. Kumar, for joining us on our special broadcast.